There is an important detail about Canadian retirement benefits that many seniors never hear explained clearly. Your OAS benefit is not simply set once a year and forgotten about. The Government of Canada reviews old age security payment rates in January, April, July, and October to account for changes in the cost of living. And if you receive the Guaranteed Income Supplement, or GIS, those quarterly OAS adjustments can matter to you as well. But there is a catch, and this is where a lot of confusion begins. When people hear that a pension can be adjusted 4 times a year, they sometimes assume that CPP also increases 4 times a year. It does not. CPP and OAS use different adjustment systems. CPP is adjusted once a year in January, while OAS and GIS rates are reviewed quarterly. So if you're a Canadian senior, retiree, CPP recipient, OAS recipient, or GIS recipient, understanding the difference can help you make sense of your deposits and avoid assuming that a payment change is an error. And today we're going to walk through the calendar, explain what happens in each quarter, and show you exactly what you should be watching for. Because the most important part isn't simply knowing that there are 4 review periods, it's knowing what those 4 periods actually mean for your money. If you appreciate straightforward information about Canadian seniors' benefits, CPP, OAS, GIS, and retirement programs, subscribe to the channel and turn on notifications so you don't miss future updates. Now let's start with the biggest misconception. Let's clear this up immediately. If you hear someone say, your Canadian pension goes up 4 separate times every year, don't automatically assume they're talking about CPP. That's not how CPP works. According to the Government of Canada's official information, CPP benefit increases are calculated once a year using the Consumer Price Index, or CPI. The new CPP amounts take effect each January. For 2026, CPP benefits increased by 2.0% based on the applicable CPI calculation. OAS is different. The Government of Canada reviews OAS payment amounts in January, April, July, and October. Those reviews are designed to reflect changes in the cost of living, as measured by the Consumer Price Index. If the cost of living increases according to the applicable calculation, OAS payment rates can increase. And there is another important protection. If the cost of living goes down, OAS monthly payment rates do not decrease as a result of that quarterly calculation. That's an important distinction. So when we're talking about the 4 times a year calendar in this video, we're primarily talking about OAS and related old age security benefits, including GIS, not 4 separate CPP increases. That distinction alone can prevent a lot of confusion. And now that we've separated CPP from OAS, let's look at the 4 periods that matter. Think of the OAS calendar as having 4 checkpoints. The first checkpoint is January, the second is April, the third is July, and the fourth is October. These are the months when OAS payment rates are reviewed for cost of living adjustments. But here's something many people misunderstand. A quarterly review does not mean there will automatically be an increase every single time. The government looks at the applicable CPI data and determines whether an adjustment is required. For example, the Government of Canada's current information shows that the July to September 2026 OAS amounts were calculated using CPI data from February, March, and April 2026 compared with the previous relevant 3-month period. That calculation resulted in a 1.2% increase for that quarter. So you can see how this works. The review occurs quarterly, but the actual amount of the adjustment depends on the cost of living calculation. That means you shouldn't think of January, April, July, and October as 4 guaranteed pay raise dates. Instead, think of them as 4 official review points. And that difference matters. Because if you receive OAS and your payment doesn't change in one of those months, that doesn't automatically mean something went wrong. It may simply mean the applicable calculation did not produce an increase. There's another detail that makes this even more interesting. The OAS calculation isn't simply based on whatever inflation number appeared in the news that week. There is a specific methodology behind the quarterly adjustment, and understanding that methodology helps explain why the number you see in a news report may not immediately match the adjustment on your OAS payment. Let's make this as simple as possible. The OAS quarterly adjustment is based on changes in the Consumer Price Index. The government compares the most recent 3-month period for which the required CPI information is available with the previous 3-month period that produced an increase in OAS benefit amounts. That sounds complicated, but the basic idea is straightforward. The government is trying to measure whether the cost of living has increased. If the applicable CPI comparison shows an increase, OAS rates can rise. And if the calculation shows no increase, there isn't automatically a raise just because the calendar has moved into a new quarter. This is one reason I don't recommend looking at an OAS payment and immediately comparing it with a random inflation figure you saw online. The official calculation has its own rules, and this is particularly important for seniors living on a fixed or limited income. Even a relatively small adjustment can matter over the course of a year. But here's the part many people overlook. Your actual payment can depend on more than the basic OAS rate. If you receive GIS, for example, your situation can be affected by income and other eligibility factors, so two seniors sitting at the same kitchen table could potentially receive very different amounts, and that brings us to who should pay the closest attention. The first group is obviously seniors receiving old age security. If you're receiving OAS, quarterly rate reviews are directly relevant to you. The second group is seniors receiving the Guaranteed Income Supplement, or GIS. GIS is tied to OAS eligibility, and the Government of Canada includes GIS among the benefits covered by the quarterly OAS adjustment system. This is particularly important because GIS is designed for low-income OAS recipients, and changes in household income can affect eligibility and payment amounts. Then there are seniors receiving the allowance or allowance for the survivor. These are also part of the Old Age Security Program. And finally, there are Canadians who receive both CPP and OAS. This is where confusion can become especially common. Imagine you look at your bank account and see your monthly retirement deposit. You receive CPP, you receive OAS, perhaps you also receive GIS. If your total deposit changes, you might naturally think CPP went up, but that may not be what happened. The change could relate to OAS or GIS instead. That's why it helps to understand the individual components of your retirement income rather than treating the entire deposit as one single pension. And there's another reason this matters. The Government of Canada's official 2026 payment calendar shows that CPP and OAS payments are generally issued on the same scheduled payment dates. For example, the 2026 calendar lists January 28th, February 25th, March 27th, April 28th, May 27th, June 26th, July 29th, August 27th, September 25th, October 28th, November 26th, and December 22nd for both CPP and OAS. So if your bank statement shows one combined deposit, it can be even more difficult to know which component changed. That is why checking your detailed benefit information is so useful. Let's now turn this into something practical. For 2026, the 4 OAS review months are January, April, July, October. Those are the 4 quarters you should keep on your personal retirement calendar. But remember, these are review and adjustment periods, not 4 guaranteed increases. The actual increase depends on the CPI calculation. The Government of Canada reported a 1.2% OAS increase for the July to September 2026 quarter. So if you're watching your payments around July, don't simply ask, did I get a raise? Ask a better question. Did my OAS rate change? And if so, why? That small change in how you think about your benefits can make a big difference. Now let's talk about payment dates. This is a separate issue from adjustment dates. For 2026, the official CPP and OAS payment calendar lists August 27th as the August payment date, September 25th for September, October 28th for October, November 26th for November, and December 22nd for December. Notice something important here. The payment date is not the same thing as the adjustment date. That's another common source of confusion. You may receive your money on a specific day of the month, while the rate being paid reflects an adjustment associated with a quarterly period. So don't assume that the day your money arrives is the day the government decided your benefit amount. These are two different concepts. And this distinction becomes especially useful if you notice a change and want to investigate it. Now let's spend a little more time on CPP, because this is where the title of today's video can easily create confusion. CPP retirement pensions are adjusted annually. The Government of Canada's CPP information states that the monthly payment increases every January if the cost of living goes up. For 2026, the official CPP page reports a 2.0% increase based on the applicable CPI calculation. So if you receive CPP alone, you should not expect 4 separate CPI-based increases during the year. Your CPP has its own annual adjustment system. However, there is another feature of CPP worth knowing. The enhanced CPP structure means maximum CPP amounts can also change based on when benefits begin, because enhanced CPP benefits are designed differently from the basic CPP structure. The Government of Canada notes that maximum CPP benefit amounts increase every month as a result of the enhancement, but don't confuse that with the annual cost of living adjustment. They're different concepts. One relates to the enhancement and how CPP benefits are built up. The other is the annual inflation-related adjustment. This is why retirement benefits can sometimes sound more complicated than they really are. There are multiple mechanisms operating at the same time, and if you're watching your monthly income carefully, you want to know which mechanism you're actually looking at. For someone with a large retirement portfolio, a small government benefit adjustment might not feel dramatic, but for a senior relying heavily on government benefits, every dollar can matter. Think about the costs that can change throughout the year: groceries, utilities, property taxes or rent, insurance, transportation, prescription and health-related expenses, home maintenance. Even a small monthly change can become meaningful when multiplied across 12 months. That's why the OAS quarterly review system matters. It is designed to help OAS benefits respond to increases in the cost of living rather than remaining completely static. And because OAS is a lifelong monthly benefit for eligible recipients, the effect of an adjustment can continue beyond the month in which it first appears. But there is an important warning here. You should never build your monthly budget around an assumed increase that hasn't actually been announced or applied to your benefit. Use your actual payment information, not a social media post, not a YouTube comment, not a random retirement calculator, and definitely not a headline claiming that every senior is getting hundreds more. Those claims often leave out eligibility requirements or confuse maximum amounts with what an individual actually receives. Now let's talk about GIS. The Guaranteed Income Supplement is a monthly benefit for eligible low-income seniors who receive OAS. Your GIS amount is not simply determined by your age. Income matters. Family situation matters, and your eligibility can change if your circumstances change. The Government of Canada's GIS information makes clear that GIS recipients must also qualify for OAS. This is why seniors receiving GIS should be particularly careful about changes in income and benefit information. Suppose someone begins receiving additional pension income, or they have employment income, or their marital or common law status changes. Those circumstances can affect their benefit situation. So if your OAS or GIS payment changes, don't automatically assume that inflation is the reason. The quarterly OAS adjustment is only one possible factor. Your personal circumstances can also matter, and that is one of the biggest practical lessons from today's video. A payment change doesn't automatically tell you the reason for the change. You need to look at the details. Let's talk about some of the most common mistakes. The first mistake is believing that CPP increases 4 times a year. It doesn't. CPP's cost of living adjustment happens annually in January. OAS is reviewed quarterly. The second mistake is assuming that every quarterly OAS review guarantees an increase. It doesn't. The rate is adjusted according to the applicable CPI calculation. The third mistake is assuming that every change in your total deposit is an inflation adjustment. That can also be wrong. Your payment can be affected by changes in eligibility, income-related calculations, taxes, deductions, or other circumstances. So if your deposit changes, investigate before drawing conclusions. And there is a fourth mistake that I think is particularly important. Don't rely entirely on the amount someone else receives. Your neighbor may be 72, you may be 72. You might both receive CPP and OAS, but your CPP contribution history, start dates, income, marital status, and other circumstances can be completely different. There is no universal senior payment that everyone gets. Your benefits are personal, so what should you actually do? You don't need to spend hours every month studying government websites. Instead, create a simple routine. At the beginning of January, April, July, and October, take a quick look at your OAS and GIS information. Ask yourself whether your rate has changed. Then compare the new information with the previous quarter. If your payment changed, identify the reason. If you're receiving both CPP and OAS, look at them separately. And if you receive GIS, pay particular attention to your eligibility and income information. You can also use your MyService Canada account to access information related to CPP and OAS benefits. The Government of Canada specifically directs recipients to MyService Canada account for accessing their benefit information and services. This is much better than trying to remember everything yourself. And if you're concerned that something doesn't look right, contact Service Canada rather than assuming the worst. One more practical tip, keep a simple record of your monthly benefit amounts. You don't need a complicated spreadsheet. Even a basic note showing your CPP amount, OAS amount, GIS amount, and total monthly income can help you spot changes. That way, when something changes, you have a reference point. Mid-video CTA, and if this explanation is helping you understand the difference between CPP, OAS, and GIS, take a moment to subscribe. This channel is focused on making Canadian retirement benefits easier to understand without unnecessary jargon or confusing government language. Now there's another important issue we need to cover, because even when OAS increases, the amount you actually see in your bank account may not always look exactly the way you expected. And that comes down to taxes, deductions, and your individual circumstances. Let's say you hear that OAS rates have increased. You might expect your bank deposit to increase by exactly the same percentage, but that's not necessarily how your final deposit will look. Why? Because the amount you actually receive can be affected by other factors. For example, income tax may be withheld, your personal benefit circumstances can change, and if you're receiving multiple benefits, your total deposit may combine several different components. This is why I strongly recommend separating 3 questions. First, what is my official OAS rate? Second, what is my official CPP amount? Third, what is actually being deposited into my bank account after applicable deductions? Those are not always identical numbers, and if you're receiving GIS, you should also consider whether your eligibility or calculated amount has changed. The goal is not to panic every time the deposit looks slightly different. The goal is to understand why it changed. Here's another concept that can save you a lot of confusion. A benefit rate is not always the same thing as your final bank deposit. Think of the rate as the underlying benefit amount. Your final payment can reflect your personal circumstances and any applicable deductions. That's why government websites often publish maximum or standard benefit amounts. Those figures can be useful for understanding the program, but they don't necessarily tell you what every senior will receive. For example, the official government of Canada currently lists the maximum CPP retirement pension at age 65 in January 2026 as $1,507.65 per month, while the average CPP retirement pension for new beneficiaries at age 65 was $877.01 for April 2026. Notice the difference. Maximum is not average. Average is not your personal amount, and neither figure should be treated as a guarantee. The same principle applies across retirement benefits. This is why you should always look at your personal records when making financial decisions. Let's return to the calendar one more time, because this is probably the most useful part of today's video. There are two calendars you need to keep in your head. The first is your payment calendar. The Government of Canada's 2026 calendar shows when CPP and OAS payments are scheduled to be issued each month. The second is your OAS adjustment calendar. That's January, April, July, and October. These calendars are related, but they are not the same thing. A payment date tells you when money is scheduled to arrive. An adjustment period tells you when OAS rates are reviewed for cost of living changes. Once you understand that distinction, a lot of the confusion disappears. And it also gives you a simple way to monitor your benefits. When a new quarter begins, check the rate. When your monthly payment arrives, check the amount. If something changes, find out why. That's it. You don't need to become a pension expert. You just need to understand the basic system. This is where we need to be very careful. Nobody should tell you today exactly how much OAS will increase in a future quarter unless that amount has actually been calculated and officially published. The quarterly adjustment depends on the applicable CPI data. So while we know the 4 review periods are January, April, July, and October, we cannot simply assume that every one of those months will produce a specific percentage increase. That would be misleading. Instead, watch for the official Government of Canada update and pay attention to the quarter being discussed. For example, the Government of Canada has published the calculation for the July to September 2026 OAS period and reported a 1.2% increase. That is a real published adjustment, but you should not take that 1.2% and automatically apply it to every future quarter. Future adjustments depend on future calculations. This is one of the reasons this channel will always try to separate confirmed information from predictions. When it comes to retirement income, guessing is not good enough. If you want to make this extremely simple, here's the routine. January, check your OAS adjustment and your CPP annual adjustment. April, check your OAS related rate information. July, check your OAS adjustment and review your broader benefit information. October, check your OAS adjustment again. Then throughout the year, monitor your regular payment dates. And once a year, make sure your tax and income information is properly reported, because income can play an important role in income-tested benefits such as GIS. You don't need to obsess over your benefits, but you also shouldn't ignore them. A 5-minute check can be worthwhile. And if you have a spouse or partner who also receives government benefits, consider reviewing both sets of information separately. Don't assume your payment should match theirs. Let's imagine a Canadian senior named Margaret. Margaret receives CPP and OAS every month. She sees a headline saying Canadian pensions are increasing 4 times a year. She looks at her bank account and expects her CPP to increase in April, but nothing changes. Margaret worries that something is wrong. In reality, nothing may be wrong at all. The headline was referring to OAS quarterly reviews, not for CPP cost of living increases. Her CPP is adjusted annually in January based on the CPP rules. Her OAS, meanwhile, is subject to quarterly review. Now imagine that Margaret's OAS amount changes during one of those quarterly periods. Instead of saying my CPP suddenly went up, she knows to check the OAS component first. That simple understanding can prevent a lot of unnecessary stress. Now imagine Margaret also receives GIS. In that situation, she knows that income and eligibility can also matter. So she checks her benefit information rather than assuming the change came entirely from inflation. That's exactly the kind of financial awareness we're trying to build. If you remember only one thing from this entire video, remember this: CPP and OAS do not use the same cost of living adjustment schedule. CPP benefits are adjusted annually in January. OAS payment rates are reviewed in January, April, July, and October, and the quarterly OAS review does not mean there is automatically a guaranteed increase 4 times every year. That's the key. So when you hear someone say, your pension goes up 4 times a year, stop for a second. Ask, which pension? If they're talking about CPP, that statement is misleading. If they're talking about OAS and related old age security benefits, they're referring to the quarterly review system. That distinction is extremely important for Canadian seniors. Before we finish, let's put everything together. If you're receiving OAS, remember the 4 review months, January, April, July, and October. If you're receiving CPP, remember that its cost of living increase is applied annually in January. If you're receiving GIS, remember that your benefit is income tested and your personal circumstances matter. Don't confuse the monthly payment date with the date of a benefit adjustment. Don't assume every quarterly OAS review creates an increase. Don't assume a headline about the maximum benefit tells you what you personally should receive. And don't ignore a change in your payment. Instead, investigate it. Check your official benefit information, look at your payment history, and if you still can't explain the difference, contact the appropriate government service. Most importantly, don't make retirement decisions based on a viral post or a dramatic headline. Use official information. So does your Canadian pension go up 4 separate times a year? The answer is more precise than the headline suggests. OAS payment rates are reviewed 4 times a year in January, April, July, and October. CPP is different. CPP's cost of living adjustment happens once a year in January. And for seniors receiving GIS, those OAS-related quarterly adjustments can be especially important, but your personal income and circumstances still matter. The real lesson isn't to expect 4 guaranteed raises, it's to understand the calendar. January, April, July, October. Those are the 4 OAS review periods you should remember. And if you receive CPP as well, keep that on a separate track. Your retirement income is not just one number. It's a combination of different programs, different rules, different eligibility requirements, and different adjustment schedules. Once you understand that, you're in a much better position to recognize legitimate changes, spot something that deserves a closer look, and avoid being misled by sensational claims online. For 2026, the Government of Canada has published the official CPP and OAS payment calendar, so you can also keep track of when your regular monthly payments are scheduled. And remember, a change in your payment doesn't automatically mean something is wrong, but it does mean you should understand why it changed. That's the habit that can protect your retirement budget over the long term. If this video helped you understand how the OAS and CPP adjustment schedules really work, subscribe to the channel for more straightforward Canadian seniors benefit information. And before you leave, share this video with a senior, retiree, parent, or family member who may be confused about CPP, OAS, or GIS. Sometimes the most valuable financial information isn't about finding a new benefit. It's simply understanding the benefits you already receive. Thanks for watching, stay informed, and always verify important benefit information through the official Government of Canada sources before making financial decisions.